Ben ritrovati martedì mattina sul floor del New York Stock Exchange. In questo momento indici in territorio negativo, grande attesa per quello che è l'inizio della stagione delle trimestrali questa sera dopo la campanella con i conti di Alcoa, ma parliamo di tutto questo con il mio ospite qui sul floor, come ogni martedì è Mark Otto, che è Designated Market Maker per Night Capital Americas. Mark, thank you so much for being with us again.
Thanks for having me back.
So, Mark, I will start with a simple point. Today is the 5th anniversary of the record for the S&P 500, 1565.15. Okay, we are not there, of course, but what can that tell us? I mean, could it be that the 9th of October is the beginning of another phase down?
Well, there's a lot of economic data that's coming out, and I think the IMF cutting its global growth forecast is definitely sort of made traders pause. We haven't seen any severe sell-offs yet, but there's a lot of data on the horizon which could definitely sway the market. So I think right now EU finance ministers are meeting to discuss whether or not to give Greece more time. If Greece doesn't come up with 31.5 billion more euros by the end of November, they're going to run out of money. So Angela Merkel is actually coincidentally in Greece visiting for the first time since the crisis started. There's over 6,000 police, counter-terrorists, and snipers there to protect her, as tens of thousands of people are protesting on the square, and there's some rioting. They're throwing bottles and sticks at the police, and they really seem to blame her for these deep cuts and austerity measures that have been put in place on the Greeks.
And don't forget also the tensions that we're seeing between Turkey and Syria. We saw the spike this morning in oil. So a lot going on right now. So we cannot blame investors, and now are really wait and see, what is going to happen.
Yeah, I mean, it seems as though there's a lot of territorial disputes going on around the globe. I mean, it still remains between China and Japan. There's still a lot of friction on the islands and the territorial dispute there. That's definitely having an impact. A lot of Japanese car makers are cutting their manufacturing to the plants in China. And it seems as though the U.S. car manufacturers are benefiting from that. It seems as though the Chinese are reverting to buying U.S. cars versus the Japanese cars. So all very interesting, but earnings are going to kick off tonight with Alcoa, so that's going to be another factor to come in play as well.
Now, before we talk about earnings, I will stay on China. You follow closely China, as we know. You take care of a lot of Chinese company listed here at the New York Stock Exchange. Were you surprised by what the World Bank said? Very worried about China. They could drag down the entire Asian region.
It certainly has the potential to do that if it did have a massive downturn for the worse. The IMF cut its forecast from 8% to 7.8%. Bloomberg had a survey of analysts. I believe it was 41 analysts that were surveyed, and their average forecast is 7.7%. So China has set the bar, or their benchmark is 7.5%. However, for many years now, China has always set the bar at 8%, and it's come in above 9%. So it's definitely some concern.
I said the bar lower.
Yeah. So, I think that you sort of have to worry about what's going on. The macroeconomic data out of China has not been good. Most traders have actually anticipated the fact that China was going to actually stabilize in the first half and make the turn in the second half, and that's not happening. Now, one thing that's going on in China is there's a 10-year change of power that's going to take place next month. Now, this isn't something like you get sworn in and it's done. This is actually a process where people are coming in and out of positions in the government. So a lot of people are saying that they're not going to make any radical changes during this duration of time. So it could delay anything that they're going to do to actually try and stimulate the economy further. For the most part, they've had this fine-tuning process, which has been monetary easing, whether it be rate cuts, lowering bank requirements, or these reverse repo swaps. But it's only in the past month or so that we've actually seen stimulus come on the horizon as well. But it's been more. It seems like their approach is going to be more incremental, more along the lines of fine tuning, instead of writing a big check like they did back in 2008 and saying, okay, we're going to spend $580 billion to stimulate growth.
Yeah, they seem to have still some tools before they do that.
Absolutely, and with any one of the emerging market economies, it seems as though they're always worried about inflation. so they don't want to reinflate, particularly with the real estate market, which has been on a roar for a long time now. In the past few months, I've seen reports there has been an uptick in real estate. So there's 70 cities that report, and 2 months ago, the first report was that 49 out of 70 cities saw an uptick. Last month, we saw 35 out of 70 cities had an uptick. There's some economic data coming out of China over the next week or so. On Thursday, we're going to see yuan lending. So the relevance of that is how much money is being borrowed in China, how much yuan is being loaned out throughout the country. China has said that they want to steer to domestic consumption and be less reliant on exports. So that's a sort of a tell sign of if that's actually happening. Next week, we're actually going to see quarterly GDP for China. And the forecast is actually 7.4%, which is under their annual benchmark, which is 7.5%. So we may see some reaction off that as well.
Oh yeah, and and then the market too, all over the world. Now going back to the earnings season tonight, as we all know, Alcoa will kick off the beginning, kick off the season. A lot of people, a lot of analysts are already revising the estimates down. We know it's going to be a very weak quarter, a very weak season. The market, do you think, is already discounting that, or the market now is really waiting, ready to go down eventually?
I think there's two ways you could look at that. It's almost like, we've seen this movie before, just the last quarter. You know what I mean? It seems as though they beat down the analysts saying, we're revising our forecast, and then the analysts lower the hurdles, and they jump over these low hurdles. I think one thing that people are going to continue to look at is what they're projecting for the future. So that may be a tell sign. I definitely think that perhaps this quarter there might be more relevance in what's going on with earnings, simply because the market's sort of searching for a catalyst to make a move one way or the other. So I think that could definitely contribute to what traders are looking for.
Even though can dangerously confirm what we already are fearing. The growth is lower in China, it's less demand. It could be a problem for a lot of companies here in the United States.
Absolutely. I mean, it continues to be that the Eurozone is on everyone's radar. China, I think, now is becoming more on people's radar than it was in the past few months. But however, I think perhaps more of a tertiary thing is going to be U.S. earnings, simply because we have sort of seen this movie. So if it does play out the same way, who knows if the reaction is going to be really severe. It could be, the last time around, we did see them jump over the low hurdles, and they made ugly projections going forward, but it sort of canceled itself out and neutralized it. So we may see that same impact off of this.
And QE3 is still on, so that could be a support for the market in any case.
Yeah, I mean, well, it is open-ended, so you could say it's almost QE infinity. So there's a lot of speculation on if third time's a charm and it's going to work or not. So, only time will tell. But I think going forward, the fiscal cliff is going to definitely be perhaps the next hurdle that we're going to have to jump over, that's going to need to be addressed, and something that traders are certainly going to focus in on.
And of course, election. Now we're following the polls. We had a bounce back from Romney. And is the market really following that closely up by this time?
As it gets closer, certainly. I think traders will focus in on it more. I think there's another debate going on now. So that's going to be this evening, I believe, or tomorrow. Sorry. So as a result of the last debate, Romney did see an uptick. It seems like he was better prepared. I think something that traders will probably be looking for is more talk about how they plan on handling the economy, what measures each candidate's going to take going forward, and how they're both going to handle the fiscal cliff.
Yeah, and tomorrow we have the vice presidential debate. So I'm sure that will be a huge topic, considering also that Ryan is very active, in Congress on a budget cuts.
Absolutely. I think that traders will be queuing in on particularly what he has to say. He is a numbers guy, and everything that's going on in the world, particularly the U.S. economy, it's just, it all comes down to numbers.
Now you give me numbers. The S&P 500, what are your levels?
Well, actually, I'm going to continue giving my friend Sarge Steve Guilfoyle's levels. So right now we're at 1446. So 1444 and 1439 on the downside. On the upside, 1450, 1457, and 1463.
Great. Thank you, Mark, for being with us.
Thank you.
E grazie a voi per l'attenzione. A domani.